All right, people. So you purchased a car, was it 2021, 22, and maybe even 23, and you got price gouged. Well, some of it was avoidable, some of it was unavoidable. Did you make a good decision? I would have probably said you should have probably bought a used car. But even though you're paying up for them too. So what's going on in the car market right now? The people who purchase these cars with $5,000 and $10,000 and $15,000 overpriced vehicles, now you're stuck with those cars and you want out of them and you can't get out of them because the dealerships will happily sell you another car or a new car, but they want your upside down equity in cash. And most people don't have it. So now what are you going to do? Well, I have some advice for you. You could just walk away from the car and take the repossession and start over, which is one option. Oh, sorry, I didn't mean to do all that. I gave you the old armpit. You could take the repossession, or voluntary turn it in and take the credit bang, or stay in your car. Hopefully, it's not neglected and destroyed beyond repair. Fix it up, stay in it, and make a little bit more extra money in your payments towards the principal, right? And buy that down until an upside down equity that you can basically you're gonna have to absorb it. You know, you're gonna have to. April's daughter was in the same situation. She had a car. We gave her a car. It didn't cost her anything. All she had to do was take care of it. And keeping up with the Joneses. I want a new car. This was last year, right?
Yeah, she had an itch.
I have to have a new car, and she went and she bought it last year. Now she's realizing, wow, this car's not worth what I paid for it. She wanted to refinance it. It's going to cost money to do that. You just can't refinance for free. And the housing market and the banks created all this behavior years ago when, and it's kind of similar now. The housing market is on that balloon, and people are going to pay dearly for that. So she went to the dealership, and I said, hey, see what it's going to cost to refinance it. If not, see what the car's worth, is trade-in value, and she's just so upside down and doesn't have enough cash to make it work out where she's going to have an affordable car payment, let alone another car. So we just told her you're going to have to ride it out, and you're going to have to
told her to
make extra payments on the vehicle and take care of what you got is the smartest advice I could give to you right now. Unless you have extra money, $5,000 or $10,000 in your upside down equity, then you're going to have to take that and toss it down on your upside down equity just to get you on a level playing field with the dealerships and the banks, and then you're going to start over. So this is a vicious bad cycle for a lot of people, and a lot of cars today do not increase in value. It's getting worse and worse and worse with the upside down equity, because as soon as you take it off the lot, a brand new car, it's worth less than you just paid for it instantaneously. And if you stay in it for a few years, it will devalue itself. So how do you fix this? My advice is make better decisions. I mean, you're going to learn from your mistakes, and some people step in shit twice and still don't learn. You don't want to get caught in that predicament. So a smart option is leasing the car, and then you don't really have to worry about depreciation and all that stuff when you go to trade it in. Unless that car holds value, then you're in a good position. But there's not a lot of vehicles out there that hold value right now. So leasing's a good option if you have good credit. Although leasing is expensive too. So if you don't put a lot of money down on a lease, your payments could be higher than you really want. So for me, when I lease a vehicle, I try and put at least $5,000 down on a vehicle that I'm leasing, and what that does is buys down the monthly payment for you. Now that makes the next person who's going to potentially get that car after I'm done with it either a lot more profit when they sell it, or the consumer's going to get a better buy. And I'm going to tell you, the customer who's buying that car isn't going to get a better buy. The dealerships are going to maximize their profits. But that's the way they go. So you're upside down. Average person who's trying to buy a car right now from a few years ago was $6,500 upside down. And I've watched videos where it's way higher than that because they had to have just to keep up with the Joneses, or they had to have, the Hemi from Dodge or whatever the case to brag to their friends. And now they're like, Jesus Christ, this is so expensive. I can't take this anymore. I want out. Well, you can't get out. So your upside down neck equity has to be satisfied by somebody. And banks can only roll over so much into that. So you can go to a new car dealership and work that out, or you can go to a used car dealership and work that out. But all those guys are interested in making profits, and are not interested in making bad deals with banks, because that comes back to haunt them as well. So the ultimate fix is stay in what you got, take care of it, make extra payments no different than your home. Like, hey, I want to stay in this home. I want to pay it off as fast as I can. I'll give you an example. I had a 30-year mortgage. I paid that off in 10 years. And it was $260,000 back then, which was 18 years ago. So, but that was strict throwing money at the principal on top of making my current mortgage payments. And sometimes it was double or triple my mortgage payments when I had it. I didn't go out and say, oh, I have to have this, I have to have that. No, I have to have no mortgage was my goal before I retire. And I achieved that. And I encourage everyone else out there to think like that too. It's nice to always have the newest stuff all the time, but it's also better to have financial freedom and not playing slave to the banks and interest. So a lot of people out here are in a bad spot. My advice, for one, if you're in that predicament and you don't have the cash to buy yourself out of negative equity, you're going to have to ride it out. And don't worry about what people think about you and what you're driving. It's just, it doesn't mean anything. How much money in your pocket, it means the most. So keep what you got, fix it up, stay in it. Hopefully you didn't destroy it enough to where it's just to the point where you can't even afford to fix it. And then make additional principal payments on it. And you'll be surprised how fast throwing a few $100s a month, or $100 or $50 towards the principal, you don't think it does a lot. It does if people just actually watch it and see. That is my best advice for you. Other than that, you're going to have to dig into your pockets and come up with 50%, if not all of your upside down equity in your car, to get yourself into another new car, to get you on a level playing field. But then you need that money, right, to just get to absorb the negative equity, not including what they want to put down on the car. So I don't know how willing they're going to want to be with just saying, hey, I need the $6,500 plus I need the down payment for, your near $30,000 entry level vehicle nowadays, entry level. And then, most people don't want the basics. So, they're stepping up to the 40 or 50,000, and you're talking bigger money. So, it's time for Americans and people just to dial it back a little bit and think about the long term, because you see how fast things get out of whack and no one's in your favor there. The banks are all about their profits and money, and same thing with the dealerships, new and used. So that's my advice for you guys. I hope it makes sense to some people. Driving an old car that's paid off, has a little surface rust, maybe a little worn out, but it runs and drives every day and doesn't cost you any real money to keep it, like a monthly payment. That's a smart consumer, in my eyes. You say you're driving an old car, that's a thrifty person right there. It's a smart person, be it if they have money or they don't have any money. A car's been on the road for a long time, for one reason or another. And typically when I see older cars, they're not falling apart, and people have been putting money into them and have enjoyed the benefit of not making a car payment or full coverage insurance for 10 or 20 years. Look at the financial gains that you have there. So I hope this makes sense. Thanks for watching.